The stock market has been moving on shaky ground. In yesterday's video, we discussed some long-term charts, mainly around areas of resistance that have a history of resistance and support. Here's the S&P 500. We looked over the NYSE Composite Index, and we also went over the weekly time frame here on the Dow Jones. You can see it tightly coiling up in these areas. You're watching the Daily Stock Market Brief. My name is Michael Silva. In today's video, we're going to be just kind of doing a little bit differently. We're going to be looking at some shorter term charts very quickly. I'm going to keep the video shorter, and then we're going to hop into some indicators and then a conclusion just to kind of wrap my thoughts for the end of the year. So let's just go ahead and get right into it. All right, welcome back. Yes, going to jump right into the SPY. I want to just show really quick just how powerful moves can take place and how fast they can take place. This is the 5-minute time frame. We had a big gap up this morning, and what do you know? We just had chop back and forth. This is like the go-to scenario here. We just go back and forth. We kind of drift higher, then we drift a little bit lower, just a bunch of chop. In the last 10 minutes, so 5-minute candle, completely collapsed itself to almost close the entire gap from the trading day. So we're on shaky ground, to say the least here. It's been a lot of interesting movements. The possibilities for a Santa Claus rally are still intact at this particular point in time, and we'll get into that. If you didn't watch yesterday's video, you can definitely watch it. But here's the daily time frame for the S&P 500, the SPX. You can see that where did it get rejected on the daily candle? At the exact area of resistance that we mapped out. Now we're still below the 5 EMA, so that's a couple of days now. It looked like it was going to be a perfect day today, just a solid green day after a gap up, but then just towards the last 10 minutes of trading, it gave back all of its gains. So, this does not look like the greatest type candle, but, we'll see what really takes place for the rest of the year. The market did seem to rally, and the futures overnight started to rally too around the possibility of a $2,000 stimulus check over 600. So we'll see how that all plays out. On the 30-minute time frame, we had this bull flag we called out. We broke above it. We closed the gap that was above us overhead, and then we immediately got rejected thereafter. And then you could see now we're at the lower portion of this channel. So still in the support range. I'd be very careful of going long at this particular point in time. Let's see how tomorrow plays. Tomorrow is Christmas Eve, and it's going to be shorter trading periods. And then Christmas, the market is closed. So, a lot of stuff can still happen. We got to keep a close eye on it. What I want to call out here is we're making lower highs currently, but we have not made lower lows. So the trend is still intact. And we got the Russell 2000. I'm only going to show the 2-hour time frame. Look at this relentless just spike from 191 to 200, since the 21st. So absolutely crazy moves in just, 2-3 trading days here. We broke through the rising wedge, immediately started backpedaling, pedaling forward right up to all-time highs. Darn near touched 200. I think the Russell 2000 did crack 2000, but this is the IWM. Now we're running into this resistance that we recently broke out, so it's going to be interesting to see how this one also plays out. The Dow Jones Industrial Average, this is the 30-minute time frame. Look at not much going on here either, right? We're just trading within this little channel that we've already mapped out. We have a negative divergence there, negative divergence there. And really, it's just been chopped back and forth. So until we break down through here, we can look at this range to potentially bounce from. If we start breaking above this area, then we might get that full-on Santa Claus rally. Now, that was the industrials. What's also important to note is the transports because of Dow theory. So we got to look at industrials and then the transportations. The monthly candle right here, we're coming to the month's end. If it finishes like this, that's not a good sign, but it needs confirmation, okay? So we've seen candles like this, like for example, right here, get confirmed to the downside, and you can see a big red drawdown. You saw it right here with this candle, boom, to the drawdown. Look at this candle. This one didn't get confirmation. We didn't break through the low of the candle. So what did we do? We went sideways, and then we started shooting up. That could be the same thing that happens here. Go sideways and then shoot up further. We got to wait for confirmation to see. Now, I would like to add that we are disconnected from the 5 EMA, very similar to how we were over here. Then we track sideways as the EMA moved up. That could be, a very likely scenario. Or because of the aggressive moves since basically 2020, I would say more in November, just recently, we've been having some very big air pockets to move us up. So a very quick snap and retrace to the 5 EMA would make a lot of sense to me in the near future. Okay, here's the NYSE, the NYA Composite Index, Broad Market Index. It looks strong today. We got rejected and we closed the gap. That's that white box right there. It was gray. We went in, we closed the gap, and then we got rejected. Little hanging man candle right there. You know, it's looking kind of weak, but this could also technically just be because it's the end of year. We have some rebalancing going on. We have all this news around stimulus. Right now, it's just a bunch of market chop. And I'll tell you my kind of thoughts here in the conclusion section. Take note of the MACD. Still above zero, but we have been spreading wider, pointing downwards. This is kind of showing us bearish momentum. This could be kind of a topping process, but, you know, like I said, anything could potentially happen. As I see it right now, I don't see the greatest time to enter in right now to go long, but I will consider it when we're more down, or if we reach around 14,000 14,100 around these other gaps. But like I said, we got to play it as time goes, because a lot of things can change if the price action were to move that steep, that fast. Then we have the NASDAQ 100, still rising wedge pattern. We closed below the 5 EMA. You know, it's still within this pattern, so we might still be able to hold into this trend line. Take note of the money flow index. The MFI has been on a negative divergence. We broke out a symmetrical triangle here to make all-time highs, but the money flow is not supporting this move. So if we continue to drift down on the money flow and get below 50, you know, it would be likely to see a breakdown, and then we might tag this upper trend line or even potentially this gap down here to see the next bounce. And by the way, a lot of people, you know, would consider me bearish. They might consider me bullish. Just so you know, it's still a strong possibility that 2021, we see some rips to the upside and make all-time highs. That's all possible. But with the overextensions, what I typically look for is pullbacks into valid areas of support so I can put my money to work from those areas. And then when we get overextended like we are right now in the Russell 2000, I look for areas to put in money to hedge short. You have to be very tactical in these situations because the market is very unpredictable right now. Here's the SOX. This is the semiconductor index. That's very important to look at with the NASDAQ because the semiconductors make up a big portion of the NASDAQ. And what do we know? Another shooting star type candle. So if it finishes like this for the month, that's not the greatest sign. It, once again, needs confirmation to the downside. We're disconnected from the 5 EMA and we're trading above the upper Bollinger Band. This thing needs to take a breath here in the near future. All right, let's look at some indicators and then we're going to go ahead and wrap up to a conclusion. The VIX, we broke out of the falling wedge. We've been drifting down. We said that that was going to happen. I said it was likely to see somewhat of a drift down. Maybe that's that Santa Claus rally and then move. This is a little bit of actually a little hammer candle right here. We found support at the breakout area, and then we kind of bounced back, and then we saw that close. You know, in the SPY and other indices, we saw that rip to the downside in the last 10 minutes. So maybe we find ourselves a little support here and bounce, or we continue this drift. It's hard to say. Then this kind of supports the Santa Claus rally aspect where we crossed above the green moving average. The last two times it did that at this specific level, we saw one, a big squeeze, and then two, a big squeeze to the upside. Both of those moves completely reversed though. So let's just be careful. This is not a predicting type of tool. This is just to help find market bottoms. And specifically, it's when it's at a lower level than this -10 and a lower level than -25. So just something to take note of. The CPC, this is the sell signal. When it crosses above the red line, we kind of push on the brakes here. That's the sell signal. We had a little bit of a tick down. That makes sense to me because we had a spike down on this purple shaded line, the CPC, that's not smoothed over the 10 period. The reason why I use the black line and smooth it out over 10 period is to hide the erratic movements from the day-to-day. Now we saw a big spike up today. If this spike continues to the upside, it's likely to see this 10 period moving average cross over to the upside potentially next week or just the beginning of 2021. The breadth of the market. This is the NYSE McClellan Oscillator, the NYMO, -13.42. A little bit more breadth than the other day, but we're still negative breadth. And you could see it. The market's not doing too much right now. It's really just kind of floating sideways with a lot of chop. Then this one's very important here. This is the Dow Jones Composite up top, and then we have the three components that make up the Dow Jones Composite. We have the transportations, the utilities, and the industrials. This is in red because I want to show the divergence. It's continuing to diverge. So this isn't a big deal, you know, for a week at a time or, you know, days at a time. This becomes a problem when it's weeks, multiple weeks, or months at a time when they diverge. This is basically going to, you know, let us know that there's some unstructurally sound stuff taking place. So we have the DGA that made all-time highs, transport made all-time highs, we have the industrials that made all-time highs, and we see the utilities struggling to make any progress since the February all-time high. This is a divergence, and they should be moving in unison with one another. And when they diverge for a long period of time, we need to be careful. Speaking of utilities, to add on to that, this is the XLU over the SPY, a broad-based index. So when this line up here goes down, that means the SPY is performing better than utilities. That's totally fine. Now this rate of change, you can look at the research that Michael Guyad did. He uses a 4-week rate of change to go risk on and risk off. You can follow him at the Lead Lag Report on Twitter. And what I'm looking right here is a 4-week rate of change. Right now we're on risk on, but you're starting to see an uptick. When we cross above 0, the next week is when you would go risk off according to his research of the award-winning white paper. Let's go ahead and just wrap up now into the conclusion section. I'll do another analysis, by the way, on gold, and I'll bring in the commodities, and I'll be talking about the dollar and how it's all set up right now. But I feel like my point was made in yesterday's video, so you can always go back there and watch it. But, we're coming into the end of the year. We're discussing whether there's a Santa Claus rally or whether there's not. I've been saying that my brain feels like somewhat of a doji candle. And doji candles, if you don't know, they have small little bodies. They have long upper wicks and long lower wicks. And basically it just means that there's indecision in the market or indecision within that time frame. And right now, it's a very indecisive time in the markets. We're pressing up against, like I said, a massive area of resistance on multiple different charts. And there's some indicators and sentiment indicators and breadth indicators, various ones that are showing that there's still more bullish momentum out there than any sort of bearish signs whatsoever. However, the resistance has been holding. So my thought process, and by the way, that's a perfect doji candle right here for the week so far, and even that one. So my thought, and even this one. So my thought process at this particular point in time is, if we get a Santa Claus rally and we start breaking above that, we might get an aggressive short squeeze to the upside, and I could be a part of that type of a move. But I want to be prepared for when that takes place and prepared for if it goes down to the downside. So I feel most comfortable coming into the holiday season, mainly being positioned in cash, and then I have long-term holds in some commodities, gold and silver. I posted my portfolio today on Instagram, so you can see it there. I also posted on Twitter. But we're coming to the end of the year. If there's a crazy rug pull, I'll be prepared for it. Even if there's a potential move to the upside, I'll catch some gains to the upside. You need to be very tactical here. You need to be careful in these market conditions because, whoever's saying that they know what's going to happen or this is going to happen, they're so certain. That's when you got to be the most careful, because most of the times when people are super certain, they end up being super wrong eventually. So you just got to be very, very careful, protect your wealth like you want to actually hold on to it, I would say. So that's all I got for you on today's episode. Tomorrow is a short day, so I may or may not post a video depending on really what takes place. I would imagine it's going to be a low liquidity type of day. So yeah, we might, I just don't see it doing much. But if we have some crazy rug pull, then yeah, best believe I'll be making a market brief. Other than that, everybody, have a happy holidays. I will be seeing you here very shortly. Goodbye.